Hello guys, welcome to another weekly breakdown video. Today I'll be breaking down the second week of February, as you can see, starting from 10th of February 2025. Now, before going to the next week, let me quickly show you the news. This is the news for the next week. Monday, no news. Tuesday, there is a whole bunch of Trump speak, Government Bailey speak, Fed Chair Powell testifies. Wednesday, there is CPI, and Tuesday, there is PPI and also GBP, GDP. And on Friday there is retail sales on 7 p.m. so it's a very high, like whole week there is news. It is not like there is no news, and it's also not like there is no very huge news, right? I have seen weeks where there were every day there were news from Monday till Friday, London, New York, right? So it's better than that. So always say I get to, don't say I need to, right? According to what Andrew Tate said, think of saying I at least get to do that, right? People don't have the opportunity to do that. So now, cutting out all of that, going to the weekly breakdown. Obviously, the weekly bias on GBP USD is bearish according to how this candle closed, and to confirm this, going to GBP, going to DXY, my bias is also bearish. It's very tricky because both DXY and GBP USD are doing some same sort of thing. So now, this is bearish, but I anticipate this to be bullish. GBP USD to DXY to be bullish because of how Euro USD closed. Euro USD is also clearly bearish. GU is clearly bearish. So I take 2 for 1, and DXY will be bullish for me. So the weekly bias is important, but it's not that important because I trade with the daily bias anyway. So on the daily time frame, you can clearly see the price has swept this liquidity from here, and it's rejecting from this daily supply zone which was made in January 7. As you can see, the price has been trading in this bearish solidified range for a bit now, and now going on Monday my bias is clearly bearish, and on DXY my bias is clearly bullish according to how this candle closed. And Monday was also aligning with the daily. Monday was also aligning with the weekly bias being bearish, so it was so high probability to take a trade on Monday to look for sales. So that is when I go to the 4 hourly. You guys know the drill. And after going to the 4 hourly, I mark this supply zone here. This supply zone was valid due to this change of character. The price went up, fill up this fair value gap on Friday, and then now it's going to the downside. So that is when I go down to the hourly. To be honest, I do a lot of things in my trading, right? I literally analyze the 4 hourly very thoroughly. Even on DXY, I do the analysis very thoroughly because I want to know where the price, if the price is going up, where it can go and why, right? Everything happens for a reason. The price, if it's going up, it is targeting some sort of buy side fair value gap or buy side liquidity. So we have to figure out why the price is going there and why it makes sense to go there, and which liquidity the price is targeting, because liquidity is the essence of the market and the price is moving due to liquidity, right? So once we have that knowledge, we can use that in our advantage, and so on and so forth. So the market open gap down, as you can see, this was 230. So I draw the Fibonacci from here. So to be honest, not one of the so in this case the Fibonacci retracement didn't work as well. As you can see, I was looking for a sell. So if I'm looking for a sell, I will look for a sell from some sort of supply here because of the sessions indicator. As you can see right here, I was looking for a sell from this sort of supply zone, but we know that anything can happen in the market. So the price went up, swept this liquidity, previous structural liquidity, gave us a M15 beautiful rejection. After giving us a M15 beautiful rejection right here, that is when I entered the market after the M5 change of character to the downside, and then entered at the equilibrium with a 5 pip stop loss. And if I show you the callouts, try to align the mid time frame rejection and the lower time frame entry together. Like in this case, the M15 rejection was so clean, and I aligned it with the M5 entry, which was the change of character equilibrium entry at our timing. The most important thing was at our time window, so I have taken this trade, right? It doesn't always need to be, if the area of interest or point of interest is very far away. In this example, the point of interest was very far away on New York session, right? The point of interest was here, which was a high probability point of interest to trade from. So in this case, in this kind of conditions, you can also when the point of interest is very far away, it doesn't make sense. That is when you can take the trade from the closest zone or closest liquidity. Like in this case, it was this previous structural liquidity. The price went up gave us the change of character, entered at the equilibrium, and yeah, we also sometimes get a trade with the bias after sweeping the market open candle. So this was a banger, as you can see, 1:3 risk to reward. Beautiful trade. So Monday was a winner, as you can see right here, right? And if I quickly show you the New York session now, no need to show you all of the data, because obviously I am only showing you guys what I have taken and what I have anticipated. So it was a 1:3 risk to reward, a beautiful trade. Always try to improve your entries in the market. Always try to improve your entries in the market, right? It always can be improved. Like, your entry is very important. Your holy grail in the market is to know when to enter and when to exit. And if your entry is good every single time, then your probability of winning is very high, because entries are very important. So now going on Tuesday, my bias is again bearish, because according to how this Monday candle closed. Simple. I keep my trading as simple as that. I look at the previous daily candle, and according to that I decide my bias, and then I go to the lower time frames with the vision of the daily bias, and according to that I see the draw of liquidity, and I see the point of interest, so on and so forth, and I target. I have made my trading so simple. How? By backtesting relentlessly and practicing. By practicing and giving myself feedback, I have made my trading so simple. Now this is when my bias is bearish. I'll go to the 4 hourly, and the 4 hourly I can clearly see the price has now changed character to the downside. Now it is broken structure, kind of broken structure, but was not able to broke structure, because a break of structure will only be valid if this body closed below here and with huge volume and with huge momentum. But in this case, the break of structure didn't happen to the downside, which is a sign that the price may not go to the downside. So I waited for the Asian range to close. Obviously, after the Asian range closed, the supply zone that I was looking to trade from, obviously if I'm looking for sales, I will look for supply zones. My supply zone that I was looking to trade from was this, and the price went up, literally gave us the move, but this was not at our timing, so I didn't took the trade. As simple as it can get. Whenever the draw of liquidity for the day is swept targets some else draw of liquidity, it can be fair value gap, liquidity point, so on and so forth. So in this case, this H1 fair value gap right here, as you can spot right here, right? So this fair value gap was what I was targeting. The previous day low was swept so early, so that is when I targeted this H1 fair value gap right here, and the Asian high liquidity got swept, but this happened not at our timing. I only anticipate the trades when the Asian high gets swept past 7 AM UK time, right? But also Rob Dono said that 6 AM is also okay, but in this case, let's see one thing at a time. Right now I'm backtesting 7 AM, so let's see how it goes. To be honest, this trade we could have taken, we could have potentially taken if I followed that plan, followed the rule, and maybe I have taken it. Yes, I have taken it. It was a winner. But yeah, this was a very tricky trade to be taken. As you can see, it was a OT entry, 9 pips stop loss. I targeted a 1:3 risk to reward. We got a 1:2.8, and then the rest was history. The Asian high liquidity got swept. After sweeping the Asian high liquidity, some sort of supply here, and then boom to the downside. So the move doesn't need to be perfect all the time. As you can see right here, the supply zones and the demand zones are not always going to get respected. So yeah, in this case, this was a winning trade, but I doubt if I would have taken this or not, but maybe I would have. So let's see in the live market what happens. So all I can do is give myself feedback and learn from this trade. All I can do is learn from this trade and just keep on doing what I'm doing. Say I get to rather than I have to, and your whole perspective will change about, yeah, 100%. This is said by Andrew Tate, and this is 100% true. Don't say I have to go to the gym. No, I get to go to the gym. There are people who want to go to the gym, but they doesn't have the opportunity, they doesn't have the physical capability, right? So thank God, be grateful, and work hard. That's it. And if somebody is trying to bully you, please don't let them. If tomorrow that guy comes back again, he's gonna pay the price, bro. I'm not even joking. He's gonna pay the price. So Tuesday is a very bullish candle, as you can see. Now on Wednesday, I'm looking for buys again. Now my bias changed from bearish to bullish. This is why I like this strategy and my way of trading, because I trade according to the bias, or according to the daily bias, right? So Monday was looking for sales. Tuesday didn't got the sales. the market closed as a bullish candle, so there is no meaning for me looking for buys, looking for sells now, right? So this is when I look for buys on Wednesday, as you can see. And also on Wednesday there is CPI news, so which is tricky, but obviously on London session there is no news, so I will look for trading on London session. So that is when I go to the 4 hourly time frame. The 4 hourly, we can clearly see there was a change of character to the upside on the 4 hourly, and whenever there is a change of character on the 4 hourly, there is a demand zone. Now the market structure shifted, the market sentiment has shifted from bearish to bullish, and I am looking for buys. And obviously if I'm looking for buys, I would target for some sort of liquidity here, some sort of liquidity point right around here, which would obviously be the previous day high or some sort of liquidity. And if I'm bullish, I would have to target some sort of things. So this is what I'm targeting. So now going on the H1 and marking my demand zones. Obviously I'm looking for buys, so I have marked this New York. I have marked this New York demand zone right here and waited for the Asian range to close. And after the Asian range close, that is when I go to the lower time frames like M15. Like when I first did the backtesting, my knowledge about this strategy was so less. I was persistent about it. I did it every single day. I never missed a day, and now look at my knowledge, bro. Now look at it. I am literally taking the demand zones. I am literally taking the Asian low sweeps. That is why you need to be persistent at whatever you are doing, and just do it. Don't think about anything. Start and don't give up, and you will figure it out, bro. That's how it goes. That's exactly how it goes, and how you get success in life. You don't think about stuffs, you just do it, right? So now on Wednesday there was CPI news, as I've told you, but on this day I was looking for a buy from this sort of H1 demand zone right here, after sweeping this previous structural liquidity, after sweeping this liquidity right here, this external liquidity, also called like ESL or something like that by Rob Tono, and a buy from this H1 demand zone. But obviously the Asian high got swept first, and after the Asian high got swept, the Asian low got swept again, right? So this is when the change of character happened on the M5. This trade is still valid because of it's still in the timing, but no, this trade I have not taken because this trade was not in our timing. Here we can see the move did end up happening, but the entry wasn't in our timing, so we didn't took the trade. So this trade was a banger, it was a winner. But the same sort of thing I would have watched here, I have watched here. But now the only difference between the move here and this here is the Asian high is swept. Instead of targeting the Asian high, I would target this London high. Simple as that, right? So that is exactly what I was looking for. But this trade was literally not in our timing, so I didn't do the trade. So again, it was CPI. So obviously CPI is very, very tricky to trade. And yeah, so Wednesday was also a trade, but I have not taken the trade because it was not in our timing. So this week I have got one trade here on Tuesday and one trade here on Monday. Let's see, I will journal these two trades and call it a week, I believe. So now going on the daily time frame, according to how this Wednesday candle closed, it's looking like a bullish candle to me. And on DXY it is clearly a doji. It's not clear, to be honest, but obviously whenever there is a doji, it is a doji, and the daily bias is not aligning. I trade with the weekly bias. The weekly bias is bearish, which is not making sense because of how this Tuesday candle closed. So I decided not to trade on Thursday. Not trading on Thursday was a very good decision because also there was GBP and PPI news, both news, and also President Trump speaks. He was putting tariffs after tariffs after tariffs, and it was a huge fucking bullish day on GBP USD, as you can see. Very, very huge bullish day, as you can see. On Thursday, not trading on Thursday was a very good decision because of news and some sort of other things. So in this case, literally now not trading on Thursday gave us our bias for Friday. On Friday I will look for buys beautifully. Yes, the price can come and rebalance it, but I don't trade the rebalance. I personally trade with the bias, so obviously I will look for buys, and on DXY I will look for sells. So this is when I will look for buy, and I go to the H4 time frame. On the H4 now the change of character happened, or the break of structure happened. This demand zone now will go here. The previous week high has been swept, so my initial target, if the market is bullish, would be the previous week high, right? So my target was this previous week high. After sweeping this liquidity right here, the price gave us a small pullback and then literally went to the upside. The previous week high has now been swept, so the week now the trades are not that stronger anymore because the previous week high has been swept. So that is when I waited for the Asian range to close. The Asian range closed, I was looking for a buy, and if I'm looking for a buy, I will look for a buy from some sort of demand zone here. but obviously this day on Friday it was a continuation model again, so I didn't took the trade on Friday also because the setup just didn't appear. On Friday again it was a continuation model and we didn't got the entry, so didn't took the trade. Simple as that. We didn't got the entry as in, like, as you can see, I only take trades after the Asian low sweep and then change of character, my MAC model, right? But in this case, when my time window appeared, the change of character happened and also the move happened, but I didn't took the trade because it was just not one of the highest probabilities of trades. If I had taken this trade, my stop loss would be below this and it would have been a banger. Friday was a winning day, to be honest. These trades like this work too. Just journal this trade. As you can see, the change of character still happened, but the Asian low didn't got swept. That's the only problem. But according to the previous day volume, huge bullish volume, I could anticipate this move. And yeah, to be honest, it was a good week. Some losses, some wins, and to be honest, it was not a bad. According to my style of trading, literally the Trump markets are good, man. Volatility, I like volatility. Volatility is what drives the market, bro. I like it. So this was the weekly breakdown for you guys. Hope you guys learned something from this video, and yes, catch you on the next video.